Hi everybody, this is Peter from the Mindful Share Trader blog and welcome to video number 5 in my chart reading series. And today I'm going to talk about accumulation and distribution. We'll have a look at some charts and I'll explain the 5 different phases of each. Now this video should, I hope, really highlight for you the importance of understanding market structure. It's a very, very important thing to understand. If you haven't already done so, I'd recommend looking at the previous video to this one, which is a guide to understanding price action and volume, because it will help you understand a lot more of the information on this particular video. The link to that's at the top of the screen and at the end of the video. And it might pay to pause this and go and watch that first. Okay, so what is accumulation? Very simply, it's the buying up of stocks by the professionals in the market after a bearish move. And it's usually done in a manner that doesn't attract attention. And the reason for this is that the professionals don't want to move the price of what they're buying against themselves and have to pay higher prices. And what we usually see when a stock is being accumulated is that it will usually trade sideways for a while in a range. And we can see that here on the chart. What you need to understand about these trading ranges is that they're usually full of traders and investors who have bought higher up. They've held on all the way down and they're now trapped in here at lower prices. And this is why we see that within these trading ranges there's price movements between the upper and lower boundaries and even penetration of this support down the bottom. And this is all a deliberate ploy by the smart money to use fear and panic to shake out weak holders so they can grab as much of the available stock at the cheapest price as possible. And this will continue until all of the supply is exhausted, and then they'll mark the stock up and off we go with a new bull run. Okay, so we'll go through the 5 phases of accumulation. And in phase A, which is over here, we'll see that supply is dominant. We've got evidence of exhaustion of supply here with this preliminary support levels kind of coming in lower down. And then we get usually a selling climax, which is a widespread bar, usually on very, very high volume, which indicates the kind of like the final shakeout and selling of the masses to the professionals. It's the final panic selling from the public as the professionals buy into the stock. We then get an automatic rally after that, and then we get some secondary testing. And I'll just explain here what a test is. A test is where we get this kind of like little bar. We usually get a bar that comes down and tests into the lower area of supply here, and it's usually on a lot less volume than the original push down. We can see here this is on very high volume. This little test here that's just testing into the bottom of that is on very, very low volume. So it's indicating that there's no more supply left. And if there's no more supply, then prices can only move in one direction, and that's up from there. Okay, in phase B, which is from here to here, we see the stock starting to build a cause for the next effect. And we see more definition of the trading range as the price bounces between them as well. Okay, and we've got some weakness up the top here. We can see some up thrusts, and this is because the professionals want to be buying down the bottom here, really, of this range. This is where they're getting the best prices. Because they're not up here buying, the price just kind of loses. There's no without the smart money to take this up through here, it won't get through this resistance support, and so the price then just winds down. And we can see more volumes coming in down the bottom here, which is indicating all this buying. You can see up the top here as this was moving up, there wasn't a lot of volume there. The volume was dropping as it was moving up, and up here where the up thrusts occurred, we did get a bit of an increase, but not much. There was just really no interest up there at all. So that's phase B. In phase C, we usually see testing. And we can see here there's a whole load of tests here. There's another test here where they're testing down into this area to just check that there's no more supply left. Okay, and in this area in phase C, we might even see that sometimes the price will pop out the top here just to see if it can be marked up. And it might continue up through there, or it might do the opposite and come down through the bottom here and create a shakeout or a spring where the price will come down, bust this support level, make it look like the price is going to continue down further and shake a lot more holders out, and then we'll actually reverse and head back up again. And we also see in this kind of this area in B and C where the stock is starting to show what the future direction of the move will be, and we can see here we're seeing higher highs and higher lows, so that's a good clue there to the fact that this was going to, you know, break through. In phase D we get this final kind of move up through resistance on wider spreads, higher volume, and we get the dominance of demand over supply. And we can see that we've got these kind of signs of strength going up through there. Okay, and any pullbacks usually on lower volume. Indeed here, we sometimes see this in phase C, or we see it further, usually actually, sorry, in phase D, we see this last point of supply coming in. Sometimes it can be a lot lower down in here, but this is a kind of first test back, just to see if there's any more supply. There wasn't any, so the price moved up off that, and that's a good place to look at to buy. I usually look for those kind of last points of supply as my entry point. And then phase E shows the unfolding of the uptrend, and the stock of the commodity leaves the trading range and demand's in control. Sell-offs usually pretty weak. So this now brings us to what distribution is. I'll go to the next chart. Now, so once the stock's been marked up and we've had our bullish run, and the stock's up at a level where the professionals want to sell it, we see the opposite of accumulation, and this is called distribution. And in order to be able to sell at these higher prices, the professionals now need to be able to offload their stock to the amateurs in the market without alerting them to what's going on. And just as they didn't want the price moving against them when they were buying, they also don't want that to happen when they're selling. Otherwise, they've got to sell into falling prices. And for this reason, they'll usually actually support the stock for a while, which you can see up here, and even mark it up a bit to make it look like it's buying, so that the amateurs will rush in and buy more stock. And of course, the smart money are sitting up here just selling to them. Now, once this selling is completed and the professionals have no more interest in the stock, it will just fall over, because without their support and deep pockets, there is no more support for the price. And so you can see here it winds down. So we'll go through the 5 phases of distribution, which are more or less the same as the accumulation phases, but in reverse. And we can see here that in this first phase here, we've got demand is dominant and the price has moved up. We get our first kind of sign of weakness here, this first point of supply, and then we'll see a buying climax on increased volume, wider spreads, and made to look like the stock's going to go higher. Of course, they're just selling in there. We can see here that we had a lot of bars all clustered together, a lot of volume, and there was no reward for effort there. That's a good example of that. And so, you know, that must be selling in there, otherwise the price would have gone higher. Then we get an automatic reaction, and then into that takes us into phase B. And in phase B, we start seeing some secondary testing of these highs, where the price is moving up and kind of failing miserably to get any higher. And it's also defining the trading range in phase B as well. And we can see the support areas down here, and it's building this cause for lower prices again. In phase C, we see upthrusts and signs of weakness, and I'll just explain what an upthrust is. An upthrust is where the price comes up through resistance, usually can be on really high volume, can be quite a widespread bar, usually closes lower down, and is made to look like buying, to fool everybody, to bust the weak short stops that are up here, and then the price will roll over afterwards. And it's made to look like the start of another uptrend, but it's really the end of the up move. And the magnitude of the upthrust can be determined by the extent of the price move to new highs and the relative amount of volume on that move. And like I say, it's all about giving a false direction of the market so that they can sell more stuff at higher prices. Okay, and then we've got phase D. In phase D, we see increased signs of weakness, lower highs, lower lows, and more evidence of the probable direction of the market. And in here, that we can see here, it's then broken through that support. And what will usually happen after that is we'll get the price will move down rapidly and then come back up and try and usually back test this area. And here it didn't even get close, so that's showing that it's very weak. and we call that the last point of supply, and that's a good place to go short. And then phase E depicts the unfolding of the downtrend, where supply is dominant and any rallies that we get are usually weak and feeble. We also have, there is also reaccumulation and redistribution as well, which occur within uptrends and within downtrends. But I'll actually put a blog post up about that on my website over the next couple of weeks, and I'll go over all this again because it's a lot to show on a video, and there's a lot more stuff that I can detail on that. So make sure you subscribe, and then you'll find out when that's going up on the website. Well, that's it for this video. I hope you enjoyed it and it opened your eyes a bit more to how it all works. I'd suggest you go and have a look at some charts and start trying to identify these kind of regions, and then you'll start getting a grasp of this whole market structure concept, because it's so important. Now, most importantly, don't forget to subscribe to my YouTube channel by clicking on the yellow button there, and you'll be notified as more videos go up. Also, don't forget to subscribe to my newsletter at mindfulsharetrader.com, and you'll receive updates on all my content, as well as extra content that's not on the blog. Okay, so thanks for watching, and until next time, bye for now.